I think Manisha Gupta, our commodities editor, also be joining us any moment. But we also have Killol Pandya with us to speak about this and more macro topics as well. We'll get to Manisha in a bit. But Killol, what do you make of this? It's not a done deal as yet. It'll probably happen over a period of time. But after all that we've been through in the previous regime and import duty hikes in order to curb the gold imports, now government is mulling a duty cut on both gold and silver.
Yes, I think you have pegged it well. We'll have to wait and see how it pans out. Another perspective on the matter is the gold bond scheme which the government is looking to launch of gold bonds which hope to attract retail monies which are otherwise being diverted into gold and channelize them into slightly more productive direction, wherein the government will be able to take advantage of the monies which the people are otherwise investing in gold, because the gold borrowing plan is going to be part of the overall fiscal deficit funding which the government is going to do, and there are various benefits to that bond scheme as well, including the coupon which the government has recently announced of 2.75% on such bonds. That is another perspective. I think it's one more way in which the government is trying to tackle the fact that India has a huge appetite for gold, and the historical piece behind our attraction to gold is that it's a natural hedge against inflation. Of course we can discuss ad nauseum the pros and cons, but safe to say that the Indian attraction towards gold has a long track record, and it's not going to abate anytime soon, or one can't legislate one's way into reducing our appetite for gold. So I think the government ought to, any government ought to take measures to manage the appetite and channelize those monies into more productive means, which I think the government has started taking the first steps towards that in that direction by introducing the gold bonds.
Killol, just stay on. In fact, Manisha is with us, but before that, ABB rather, the PAT numbers are coming at 59 crores versus our poll of 70 crores. So a miss. Let's wait for the sales numbers. The expectation is that they will clock in about 2,000 crores. I don't think that would have happened. So there's a bit of a miss there let's see. Maybe there's a miss there as well. But definitely the bottom line numbers are not that exciting. We anticipated that the margins could go up to 8.1% versus 6.8%. Maybe that also hasn't happened. As of now, I just have the PAT number though, and the PAT number has missed estimates. It has gone up. Yes, the expectations were though for a 55% growth. I think this has led to a 30% growth. The sales numbers actually are pretty much in line, 946, so hardly any miss there. Maybe an odd slight dip in the EBITDA margins compared to expectations. We were anticipating 8.1. Maybe they've come in slightly lower than what we were working with. Just get those numbers up for you in a moment as well. But ABB India, I don't think the stock should be reacting too favorably to these numbers, because the bottom line number has certainly been a miss. They've won some orders in the last 3 or 4 odd months as well, so you've got to keep that on board, that the order intake has been strong, and it's clearly showing in the way that the execution has not been really dampened too much. It is still okay, just a 44 crore miss, so that's not really a miss. But yeah, the bottom line number has certainly disappointed. And that's actually been a story with cap goods at large this earnings season. Thermax disappointed, some of the others have disappointed. L&T was a stark standout result as well in the large cap space last week. So it's been a quarter of disappointments for cap goods, and it's no different for this one. Margins are okay actually, so maybe that little bit of a sales dip, maybe some other below the operating line expenses have led to this, but the profit growth has not been as much as we were thinking it would be. It's not bad numbers, but not up to the expectations, and which is that the stock is down 2.5%.
Oh, yes, indeed. Actually, the initial tick was down 3% plus, so maybe some bit of recovery has come into the stock. We'll talk about ABB India's numbers in a bit, but Manisha Gupta joins in, our commodities editor, for a quick take. As Neeraj and Killol were just discussing, there might be a big cut in import duty in the works by the DIPP, and this would be after I think 2 years. Manisha, if my memory serves me right, that there would be a reversal in the duty structure for gold.
Well, absolutely, yes. It was in 2013 when the gold imports were really surging more than 1,000 tons per annum as well. And that is when you saw the CAD being impacted. And that is when the government had taken all those steps. You saw no gold duty on silver and duty on gold and silver. And in last 1.5 years, from 0 to 10% of a record high is what we are dealing with at this point in time. And that has led to a lot of smuggling into the country as well. So the gold imports really are happening, but not with the duty structure being into being. And the government really seems to be plugging quite a bit of holes at this point in time. You have the gold monetization scheme which is being launched on 5th. You will have Made in India coins as well, and the sovereign bond gold also being launched on 5th, where you have an interest rate of 2.75% being given out. So apart from this, there is also a meeting today happening with Finance Ministry and other related ministries as well, where they are talking about cutting the gold import duty and silver import duty as well from 10% to perhaps 2% on the lower side. Well, remember, industry has been for the longest time making representations to the government to do that, because it has been impacting their trade and the skilled workers as well. So it finally seems to be happening at this point in time. And not just gold and silver, as per the sources whom we have been talking to suggest that it may happen in case of platinum and diamonds as well. So the overall gems and jewelry meeting is happening in the Finance Ministry today, and you might be looking at hearing something by today evening itself on how they really plan out the next 1 year.
Okay, great. Thanks, Manisha. Thanks for taking us through that update. I just want to mark ABB India again, because the intraday graph would suggest the way the stock has recovered from the day's lows. It was down about 3%, so some ground has been recovered, in fact half of it, and now lower by about 1%, still maybe nudging towards the green line. But Killol, just wanted to get a quick sense from you in terms of the debt market and the fixed income side. Are you seeing there being enough traction? Because we've essentially seen debt flows increase and dominate the overall flows coming into the market. Do you think that would continue, and what would that mean for the yield? We're already seeing the yield move towards the 0.64 mark.
The thing is that the interest cycle per se has been softening for some time now. We have seen 125 basis points rate cuts already, and given that the government has taken, RBI basically has announced certain steps which will attract FPI money flowing into our bond markets over a period of time. Seeing FII inflows into the GSEC space in pulses till 2018 and beyond, wherein the scheme basically envisages that the FIIs will be permitted to participate up to 5% of the outstanding stock of in the GSEC space. This is enthusing the market participants. Also, the background factors, the macroeconomic factors, including a comfortable CPI, as well as global commodity scene which is soft, especially the crude oil prices, which are have been soft for some time and expected to remain soft in the foreseeable future. So in that context, the macro environment is supportive of bond rally. We have seen plenty of rate cuts come in, and there is at the horizon we are able to see continuous FII inflows into the GSEC space. So in this environment, it is but natural that some continual traction is seen in the bond markets. Of course, after the rate cuts, the 10-year benchmark had dipped down all the way to 751. The month of October has seen some reversals. Currently, we are placed at about 7.61. But the overall trend and trajectory of the Indian fixed income instruments, including GSECs and corporate bonds, ought to be benign for the next 2 to 3 quarters. So in that context, I do see the positive sentiment in the bond markets continuing for some time, and naturally that should entail continuing interest in the fixed income space in India.
Killol, just before we wrap up the discussion, this gold, of course, duty bit has maybe some impact on the trade deficit zone. So for a lot of other measures being taken, Fed rate hike doesn't seem to be given this December as well. What's the view on the currency? It's now around that 65 half odd mark as I saw today. What's the medium term trajectory of the rupee likely to be?
See, the rupee has been volatile, and that is something of an understatement. We have been seeing a lot of movement in the rupee. Every day we are seeing swings. The monthly data also tells the same story. However, I believe RBI is looking to anchor expectations at the 65 levels, and RBI is looking to draw hard lines probably at somewhere in the habitat of 66. RBI does have plenty of ammunition to tackle it. The forex reserves are significantly higher than the 8 months import cover, which is kind of the benchmark, and I think we should be able to spare something like $10-15 billion to defend the currency if the need be. However, there is going to be an interplay. I think RBI is watching what Fed is doing, because the Fed hike will entail some amount of outflow, and that will lead to somewhat easing in the rupee scene. So RBI probably will want to see how much it needs to sterilize, and will want to see what is the actual impact on the rupee before it starts defending the currency. Having said that, I think the rupee will remain within the 64.5 to 66 range, and I believe RBI is looking to anchor market expectations in the foreseeable future at 65, and as I mentioned earlier, will definitely draw hard lines in the habitat of 66.
All right, Killol, we'll let you go at that. Thanks very much for taking out the time to speak with us today on the bond as well as the money markets. That's a quick view on the macros. You're looking at the index still holding above the 80-50. I don't think there's been any sort of change there. The broader markets are also holding fort, and it's really about cyclicals. Not that the Bank Nifty is doing a whole lot in this session today, which traditionally is the case. You can see the Bank Nifty being largely flat.
Take a break on that note. We come back and continue our discussion on market then.